The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. We have a special guest today. Let me get started. This is Gavin Webb, Portfolio Manager and Certified Financial Planner from Acumen Capital Partners. He's also retirement, estate, and tax planning expert. We're pleased to have you on the show. Gavin, welcome to the show.
Hey guys, thanks for having me on. Great to see you guys.
Yeah, thanks for coming tonight.
Before we get into it, I hear that you are a professional beer league hockey goalie. Tell us about that.
Yeah, that's an interesting one. So I started playing goalie when I was 4 years old, and playing minor hockey, goalies get hosed. I don't know if you guys ever played hockey, but the goalies, you got the most expensive gear on the team, and if the game's out, like I grew up in Port Coquitlam, game might be in Chilliwack, 90 minutes away, dad's driving there in the snow, and you're not playing. And your team fees, they don't change. They're the same as everyone else that plays every game. But beer league's kind of where the tables turn. Where
you're the man. Everyone's paying you to come and
play.
Oh,
yeah. You're getting calls at like 6 p.m. saying, hey, can you meet me out at UBC in 30 minutes? I'll pay you $50 to spend 2 hours in traffic to haul it out there. But yeah, no, it's interesting. A lot of money in beer league hockey for men. Yeah. A lot of people outside of the hockey community don't understand how they even have these, it's called Live Barn, where you can watch all the beer league games you want in North America.
Oh, I've never heard of that. I play beer league, but I didn't know that there was like a live thing.
Oh yeah, it might be a good stocking stuffer for any of the kids out there that want $15 a month. You get all the beer league games you want. That's NHL Center Ice can't
take us back.
Holy shit!
Yeah, take us back. So when you first started being a goalie, does that mean like it's oftentimes the younger brother or the fat kid that no one wants on the team, and no one wants to be goalie, and you're in? Is that how it started with you too? Yeah.
Bingo. Worst kid on the team by far. Couldn't stand up. Dad's the coach. Says, just make yourself useful. Go stand in the net, and turned out to be.
And you're like, oh, he's actually pretty good.
And
that's awesome.
Oh, that's awesome. We play, when we play, we pay for tournaments. We pay for our goalies, all of his drinks, all of his time at the tournament. It's so funny how like you said, during the regular league, you got to sit on the totem pole. Beer league, you're the man.
Goalies are hard to find. Like, I don't play beer league, but all my friends who play, like, it's hard to find a goalie.
Oh, no, for sure, yeah. No, especially those games at like 10:30 at night where there's not many takers on those. So that's why they maybe slip you $100 to show up.
I guess your sporting dream would be to be the E-bug of the Canucks or something where all these injuries happen and we got to call somebody.
Yeah, no, that especially when you move down to like some of these states where hockey's not as predominant down there. So like here, it's obvious choice. Like I know a few guys that went to UBC, and anytime the Canucks, like Miller was the last one that got injured, and they call up a guy from UBC to go sit on the bench. But down the south, it's you own a pair of pads, good chance you can play.
Yeah, we all heard about that story. Was it the Leafs? No, was it Carolina or?
Yeah, the Leafs. No, it was the Leafs got beat by the third. Like the first goalie went out, second goalie went out, and it was the beer league goalie that
and he played for Carolina, but he was in Toronto, right?
I think it was in Boston.
Yeah, the Zamboni man.
Yeah, it was pretty awesome to watch. Can't fault them.
And all you listeners who are Canuck fans, back in, I believe in the 90s, is Chris Levesque. Do you remember that name, Gavin? Yeah, back in the day.
Yeah.
So, all right, let's get into it. Thanks, Gavin, again for joining us. A lot of things have happened in the market, and the biggest thing that happened down south is we have Trump as a presidency. So what do you think that means for Canada and the markets?
So I don't work for Fox News, don't work for CNN, NBC. What we do here is we manage money. And so there's a graph behind me that if you look at it, doesn't matter, it's hard to see, but it doesn't matter who's been president, who's what, Democrat, Republican, doesn't matter. Markets keep chugging away. Markets have always outperformed long term. And so you get rewarded for being in the stock market because of volatile times and with the news that's going out. But yeah, it's interesting times. With the election that happened, we found either way, we saw in our office that the markets were going up. Just how the patterns and the historical after each U.S. election, it's almost as, because it's such a long drawn out process with U.S. elections, it's almost like everyone after each election, doesn't matter who wins, everyone takes a deep breath and
they already knew. Yeah. It was already like the writing was on the wall, like the markets had already priced everything in. And that's the one thing that's funny I saw today is I don't know if you guys saw Trudeau going down to Trump at Thanksgiving. And some comment now saying that you're going to destroy Canada with these tariffs, but we'll just become the 51st state of the U.S.
Yeah, no, it's interesting. And then there's also like go to his first term where everyone thought like it doesn't matter. It's 2016, we had people wanting to sell their whole portfolios. We had people in 2020 that wanted to sell their whole portfolios, and that was the wrong answer. Twice. And so you look at some of the portfolio holdings that everyone thought were going to get destroyed in 2016, anything environmental, like such as water, clean energy, like waste and food, trying to find ways of feeding the world. And those were always thought to be destroyed with Trump coming in 2016. And they actually, that was the stretch from 2016 to 2020 was their best period in some of these holdings. It's just sometimes it's tough to do, but you just have to have a diversified portfolio. And U.S. is a strong economy. Canada, it's probably if he puts a 25% tariff, won't be sending a thank you card, but Canada will get by.
Yeah, what do you believe is going to happen? I saw some talks that like GDP would drop to like 2 or 3%, which obviously would push us into a recession. Like, what do you think that would do to the markets?
The markets, to be honest, I think the markets have already factored everything in right now, and it's just noise is how we see it. There's so much talk of what's going to happen, and a lot of the times too, it turns out just to be noise. I have to see more things about more in depth of what the facts are on the table. It's still everything is very preliminary.
Yeah, and he's not even in office. He's not even in office yet, and he's like just saying these things. It's like there's no bill or anything.
Yeah, so it's one of these ones where it's got to take a deep breath and just
like just to segue what you just mentioned. We know with this recent run up in the markets. Do you think it was just temporary, or do you think this is a sign of a more of a long-term trend of what's going on?
We've had an excellent year. I don't think this is an outlier year. This is the year where everyone gets cocky and you start having people, I should go more aggressive because it's a business of greed. Like you got times when markets are doing really well and it's, I got to get more aggressive, which is the wrong answer because this has been an outlier. Long-term U.S. markets, the average around 11% year in, year out. This year we're closer to 30. And so that's an outlier, but it's not if it's going to happen, it's when a recession is going to happen. And so it's all comes out, averages down, but yeah, it's been an excellent year this year. But yeah, it's not going to happen every year.
And that's are you like having people like start like selling some assets off, like getting prepared for that? Like what's your sit down if you were talking to me as a client saying like, I'm doing really good, I think I should go even crazier?
The answer would be to sit down and let's rebalance. So
Yeah.
we are rebalancing the portfolios. It's putting in fixed income. So stocks have ran away. So it's important to come back and rebalance and stick to the approach that we've had this whole time. And
Yeah.
so it's a lot like we spoke about hockey earlier on. There's so many similarities in the investment field as there are to a hockey season. It's things aren't going to go well. It's important to remember you can't get too low when things are bad, and you can't get too high when you have a year like this. So you got to be very steady, and it's really important because we're going to see some more volatility, especially coming up with like you were saying with what's happening in the news. So it's important to be neutral. Can't get too high. Can't get too low.
That's the hardest thing is like you got to be in the middle. It's the people that are like so down on the economy, it's not going to go anywhere. Oh my God, the economy's the best in the world. It's like find that middle ground.
Yeah, I find
Yeah,
it hard to understand because we're in the housing market and we do it day in and day out. And the last couple of years, it's been down. And this year, we've seen the stock markets go up. So can you explain the divergence between housing and the financial markets?
Yes, housing market's just another asset. It's just how we got the different asset classes out there. Owning a home is just another asset, and they're not always correlated. There's been times where the housing market really benefited or where the stock market hasn't. So it's all comes out in you have good years in one, bad years in the other. So but there's not too much correlation there.
That's why I always sit with people and say, hey, like you can't just have real estate and you can't just have investments. Like you got to have that diversified asset allowing you when housing markets are going down, at least you have something else that's winning as well.
Yeah, no, exactly.
Alex, you go on to the next one.
Yeah. And so the one question this one I've seen with working with some older clients, because of the run up with inflation, like, have you been seeing some people that had retirement plans, like, change a bit? Because like let's say last year stocks were down, maybe they planned on retiring. Like what did you guys have happen there?
So we take a different approach than a lot of our other firms. So we don't believe in killing our clients off, way to speak. So when we do retirement projections, we don't have it where, okay, you're going to have this much money when you're 65, when you retire, and then you're going to be broke when you turn 90 years old. We strongly disagree with that approach. So we take a very conservative approach when doing retirement projections.
Yeah.
And we like to have, so we're a wealth management office, so we're creating generational wealth. So what we do is when preparing retirement projections, we treat it when we are doing it that you have the same amount of wealth when you start retirement as when you end retirement.
Okay,
So we're not overcommitting. So that gives us the flexibility. So if we have an awful year in the markets, your retirement is still on track. It's part of the plan. If we're shooting the lights out, fantastic, we're still on track. So we're not banking on to get an aggressive return to meet someone's retirement projections.
And that's like, how do you like sit with someone then that's like, hey, I want to retire by 70 and I want to spend 100K a year. Like how do you help someone manage that? Like to know like, okay, you actually need to have X amount then.
Yeah, you just give them the facts of what it is. So everyone's different. Like what makes a humongous difference is if somebody has their home paid off in retirement.
Yeah, totally.
Because that like another asset, and they can get money from their home or downsize, and that brings in some money that they can use to retire. But yeah, everyone's different. Some people, like if someone's renting and they're trying to retire and the money's not there, there's not going to be a place where you can dip in to get extra funds. But yeah, it's one of these case for case basis, and you just got to lay out the facts. They may not like it, but hopefully it's early enough where it can be a wake up call to change course or to get prepared and make arrangements. But yeah, no, you got to let the clients know what's going to happen.
I'll throw a bit of a curveball at you, Gavin. I'm interested to hear your takes. Reverse mortgage on homes for people. Tell me what you think of them.
What do I think of them? Not a fan.
Tell me,
Not a fan.
so tell me like where, like, tell me like, I'm gonna bring some stuff up to you after, but tell me like, where do you see them an issue?
Where do I see them as an issue? It's, yeah, just not a fan, not something we want our clients to get into. A lot of the tough part of a lot of investments is explaining them to clients. And so it's to make it clear of what all the repercussions are.
Yeah.
And then it's easy with a reverse mortgage. Clients say, oh, there's money coming in, but it's the strings attached where you're losing your home, where at the end of the period, it's a tough situation.
But that's where I think, so my thoughts, so like, would you tell someone, hey, go get a home equity line of credit or a mortgage? What's the difference there, like, for you that way?
So home equity line of credit, are we speaking for retirement?
No, like, let's say the big one that we see right now is people wanting to gift, like, let's say you had a kid, you're 65, you got no income, you can't get a mortgage, you have this big asset, you don't want to pull from your investment, and you want your kid to go buy a house. That's where we're really seeing it come into play, is they have to be able to tap that equity somewhere.
Yeah, no, when we meet with a client, they're our client, and our job is to look after their best interests. In a situation like that, if someone's going into a reverse mortgage so they can fund their kid's house, that's not in the best interest of our client. So when we would tell them that we do have it where like everyone wants to help their kids, but it's at the end of the day, they can't afford it. So at that point, we would tell, like, if you're going into debt to help your kid, it's not the right decision and for you.
But what would you say, like, so I don't love reverse mortgages for like taking just debt to go invest or something. The one that we've helped with a lot of people is they know they're going to downsize in a year or two. It is cheaper. Let's say 2 years ago, stocks were down 20%. They were able to get a reverse mortgage for 7%. They were actually able to use their house, and that one actually created them wealth in the long run.
Yeah, no, it's still not the biggest fan, but of reverse mortgages, but especially when it's to fund something where they don't have the money, but yeah.
Yeah. That's what I mean. That has to be a plan. And that's where, for me, I work with like an advisor and stuff, like when we're planning it, of like, hey, this is why they're doing it. This is what's going to happen. Because there's the stories of people that had one that took out 200K, spent it in a year, and it's like, you're screwed now.
Yeah, no, there's a lot of cases like that, yes, or somebody not fully understanding. They when they're signing the contract, they're a bobblehead, like, oh, yeah, no, everything's good and gravy. Then it comes time to pay the piper, and it's a big surprise.
So,
that one, sorry, I just wanted to jump into that a little
Gavin,
bit.
we hear a lot of people, especially with mortgages and such, they have everything with their bank. And the same could be said with investments too. Is it a good thing or is it a bad thing? And why is that? Why?
I might be a little biased on that one, but yeah, I would say that when you're at a bank, they're trying to push their products. So if you go into any major bank in Canada, guaranteed that whatever logo is on the front of that bank, they're going to be pushing you that specific product that they have with that name. Doesn't matter if it's the best product for you or if it's the best performing one, they'll be pushing that product guaranteed. With us, with being an independent at Acumen, we have the ability, if we find that BMO, they got the best product, we can grab BMO's product. If TD or Bank of Nova Scotia, they have a better product, we can get that one. As well as GIC rates as well. It's not always the best, especially if it's in a cash account, but we have access to all the different banks and we can pick and choose, similar to what you guys can do with mortgages.
Excellent. Do you have like in our case, for me and Alex, like we have a fiduciary duty to the clients, and like that's a big one where at the banks they actually don't. Do you have on the investment side, do you guys have something like that as well?
Oh, the financial industry is very tight. Yes, no, there's definitely, if it have to do a fiduciary duty, client always comes first. That's a non-negotiable in the investment world.
Exactly. And that's where, yeah, I find with the banks is, yeah, they will sometimes be like, oh crap, we didn't train the person properly. Oh, it was not our mistake. And they can wash it under the table.
So, yeah, Gavin, my next question is, so let's say I'm a first-time home buyer. I come to you to help. There's several accounts out there now that the government, it's a first home savings account, TFSA. What account should I be saving my money with?
That's an excellent question, and it completely depends on the individual. FHSA accounts, fantastic if that's what you're using to purchase your first home. But if you are planning to use that money you're putting into for anything, or planning to withdraw it for anything else, is definitely not the account for you. Just because, like, we have seen it too, where some people where they'll put money into an FHSA account while they're going to school, they're getting they put it in and their incomes are low, but they're getting a bit of a deduction on their tax returns. And then, I need some extra money for school. And then they're withdrawing it. But when they withdraw it, they're at a higher tax bracket than they were when they put the money in. And it's a situation you want to avoid. So if FHSA accounts, fantastic. If you're going to purchase a new home, if not, best to stay clear. TFSA accounts, if it's a great tool, very underutilized. That tool, it's the best one. So if you're if you're going to school there, Alex Pang, TFSA account might be the one for you. If your parents didn't set up an RESP account, if you're saving up for your family's vacation, markets ran up this year, don't want a big tax bill for your family's vacation. Heck, maybe even you want to buy a new car this year. TFSA, you can sell the different holdings in there, not trigger a taxable event. Yes, but completely depends on the individual.
Yeah, I always warn people, like, if you think, like, if you have an emergency account and you think, like, some people will say, I got $8,000. I'm like, you want to buy a home, but, like, if you need that funds for anything else, you can't put it in the first home savings account because you're just going to get triggered once you have to pull it out.
Oh, yeah. Yeah, no, for sure. Yeah, no, and it can get ugly fast, for sure.
But this time of the year is like my favorite because, like, getting to show people that are buying a home in the next, like, month or two, tell them, hey, you got to get money into the first home savings account before the end of the year. And then if their closing's long enough, they can also max out their RSP if they have the right amount. And it's pretty awesome getting to see people get a nice hefty tax return at the end of 2025 as well.
Yeah, no, it's definitely in the tax world as well. Like, just as we're approaching the end of the year, like, if there's a holding that's blown the lights out,
Yeah.
you can split up different tax bills if there's a capital gain between late in December and January. So yeah, so there's different ways that you can benefit clients.
And that's the one thing I find that people don't understand with the first home savings account in your RSP is, like, they think they have to take the tax, like, deduction the next year. They're like, oh, I've put the money in, I got to do it. It's like, no, if you are going to school, wait till you're done school. Wait till your income's up higher to actually claim that tax deduction.
Yeah, no, absolutely. And that's where we work with accountants closely as well. And so, yeah, so that's the type of conversations that we have as well.
Now, I know this one we wanted to chat with you about, Gavin, and I like to always hear people's thoughts on it. Is like, if you had someone, should they be investing more or they should be paying off their mortgage faster? Like what do you think? And I think every opinion's different. Like, what would you say to someone?
What I would say to some, again, depends on the client. But I would say that it all depends on the interest rates, like, and what stage of their life they're in.
Yep.
Someone that's younger and can withstand some volatility in the markets and have a long-term time horizon, I would suggest, markets are going to outperform. Even with interest rates where they're at, they've been coming down. But even at their heights, the stock market long-term has outperformed. Yeah, but people are getting a little closer to retirement. And like I said, it makes all the difference in the world for some to just go into retirement with a clean slate. Like,
it's like a weight off of people's shoulders. That's where, like, some people don't understand. It's like, hey, this may not even be the best financial decision for you, but, like, it gives you peace of mind that you know that, hey, I don't have to make this. And that's, like, it's always on the person as well.
Oh yeah, no, you're right. It's there's the right answer on paper, then there's the answer that's going to help people sleep at night. And we've seen a lot of people go for the answer that's going to help them sleep at night. And yeah, and you can just when you meet with them, you can see that there is a complete weight off their shoulder. They've got options.
I've faced that question too, and like what you said, it depends on people's appetite for risk and how close are where they are in their life journey. Someone like Alex and I on the younger side, we probably can handle more risk, and we would look at the numbers. Like I can earn a better return than my 4 or 5% mortgage in the market because we have some time. Whereas somebody maybe our parents' age, 50, 60, they want, or more than 60, 70, something like that, they want to pay off faster. I guess there's no real wrong answer in this case. The wrong answer is to blow that money in Vegas or buy a Tesla or something.
That's the most important thing. You got to be doing thing.
Yeah, no, it's important to, especially in retirement, like stock markets have outperformed long term, but it's when you retire and you're counting on money to come into your bank account each month, and you don't want to be selling investments when they've tanked because, like I said, it's not if, it's when there's going to be a recession. And so that's the thing that we were trying to avoid, and that's why we go more conservative as in retirement. And you can still go into equities, but you don't want to be counting on Apple to be at a certain level so we can sell it to pay you for next month. It's not a good game plan.
Yeah, I think the most important thing for people is like, you got to do one of them. You can't just go into it and say, I'm not going to invest, I'm not going to pay my mortgage down. And that's where like, it's such a cool thing getting to see everyone's finances, but it's like, there isn't a one size fits all. It's like, you got to find out what's best for you.
So I want to play a little game with you, Gavin. Now, I think I know the answer because you're biased, but if you had, I was going to say 100,000, but 100,000 is not that much these days anymore. Let's say 500,000. No. If you had 500,000 cash that you got as an inheritance or you won it in the lottery, what would you do? Would you put all of an investment, buy a property, or would you split it? What would you do with that 500 grand?
500 grand in the markets, baby.
No real estate, nothing at all?
Yeah, no, same approach. Nothing changes. Stick with the plan, like we tell our clients that you're gonna have great events in your life, you're gonna have bad events in your life. It's all about sticking with the long-term plan.
You're not gonna go buy the penthouse view of the BC arena.
No, the big thing too is for me, since we're playing this game, is I own a house. So with that, it's a humongous advantage when you own a house that's principal residence. It's non-taxable. So as long as I'm living in this house, it's not taxed. I add in the second Alex Pang hands me $500,000, I go hunting for a new place. That place isn't going to be treated the same way tax-wise as my home. So that's where I see there being a bit more flexibility on the investment side to do a bit more tax planning that way versus adding, hey, if the price is right, that's a major thing too. Like it's different with the stock market, like everything's efficient. Like you look at like Apple, millions of shares are exchanged per day, like change hands, where in real estate, you look at the houses that sold in Coquitlam, there might be a few hundred that change hands over a month's time. So that allows price disparity. So there's going to be deals out there, and there's going to be expensive property out there. So that kind of allows a bit more flexibility.
Yeah, I think it just really comes down to what the person wants and what you find. For me, I have real estate and it's going to the deathbed with me. It's so like taxes that wise, I'm not even worried about the tax planning because I'm going to go to bed with multiple mortgages when I hit the crib.
Yeah, no, and it's another thing too that we've spoken with clients as well with adding a second property. Like again, with the taxes is a big thing. Like just wrapping around hey, there's tax, and then as well, it's a big job looking after a second place, and a lot of people can't manage that. Yeah. And so it's one thing about having aspirations. It's another thing going out and doing it, and like dealing with a tenant. Like that's not always a smooth process, and unclogging someone's toilet. It's different things like that where you're getting your hands dirty, where in investment wise, hey, if you want to own real estate, there's ways of doing it where we can put it into a day account as in the form of a REIT, where you're getting exposure to real estate where you don't have to get off the couch.
Yeah, that's where, yeah, it comes down to that. Like some people think they think buying real estate is easy money. And 2, 3 years ago, you just buy something and it increased by 200K. I think real estate is back to what it used to be, where like buy something, you need to put sweat into it to actually increase the value. And it's not just going to give you 100K overnight.
Yeah, no, that's true. And it's very easy to pump money into real estate, and it doesn't always reflect in a higher home evaluation.
Well, we might as well finish this game off. We should all play. Alex, 500 grand. Right now, what you going to do with it?
I'll do 250 in buying an investment property and 250 in the stock market. I'd go 50-50 is where I'd go. Tell you this, I'm probably not buying in BC for a property. I'm probably going out east or Alberta is where I'd be looking that way. And I'd be looking at like multiplexes, like talking 6 to 8 units together. And that would be like, for me, that is my like cash account. That's like my guaranteed source of revenue that way.
Yeah, for me, like up until 2 years ago or 3 years ago, I would have been real estate because that's what we know. Unfortunately, we got taken to the cleaners last couple of years, and properties don't pencil in Vancouver and Toronto. So I would agree with you too. I'd probably split it between invest like in the markets and real estate. And I do agree with you. Like at this time right now, GTA and Lower Mainland doesn't pencil. So it would have to be Alberta, Calgary specifically, in multiplex or duplex or something like that. So slowly winning us over, Gavin.
Hard to go down by Mexico. Yeah. Maybe I go buy in Mexico.
Maybe put like 1 or 2% of it in crypto. Like, my goodness, how this coin just shot up to 130,000?
Isn't with Mexico, it's like there's 100-year like lease on the land.
You don't like you can't own it. It's either you have to have like someone that owns the title. Like us, like a foreigner can't own it. There is no like lease, but you just can't like actually own it is the difference.
Okay, yeah, and I've heard different clients that with places in Mexico where it's like you can't even flush toilet paper. Yeah. And it's like you got a little bin beside the toilet.
Yeah, it was like that in Paraguay when I went.
Yeah, I know a couple people. Yeah, I mean, I know a couple people that bought some in like the last 2 years, and they made some good money, and it was just off like cheaper amounts, which is nice.
Yeah, no. Again, if the deal's right.
Yeah.
Like there's some good money was made during the 08-09 financial crisis. Going into Arizona was devastated, absolutely gutted. And they have rebounded and are hotter than ever down there. Yeah, there's definitely money to be made in real estate. It's all about getting a good value for your money.
I find the same thing in you probably see it, Gavin, in stocks and real estate. No one wants to buy when it's low. They're going to wait until everyone else is buying. It's going crazy. Now they're going to be like, okay, I'm going to get on the wagon now. It's going to go good now. But like no one's able to get in, like even in the middle, they're too scared.
Yeah, we call it being house horny, where you get just people coming in and they're just, I got to buy a place. Doesn't matter. Like, oh, absolutely. Yeah.
That's me now is get the calls. They're like, what? The person told me, my parents told me you got to buy real estate. I'm like, you're buying downtown Vancouver. You're paying rent right now, $2,000 to own this place is going to cost you $5,000 a month. Like, how does this make sense to you? Like, it's going to be a good investment. I'm like, but that's not an investment.
All right, before we let you go, Gavin, I do have one question. It's involving estate planning, and it affects us a little bit because our parents are getting older, and it might come into play for us too. For estate planning, I heard, correct me if I'm wrong, but I heard that parents can add their kids onto title of their home before they pass, so that when they pass, the kids don't end up having to pay probate because they're already a co-owner of the property. Is that advantageous? Is it not anymore? Or what do you think the strategy is for older parents?
Yeah, for older parents, it comes back to the point, like we're acting in our client's best interests. So with some of our clients where it's like adding their kids, it's not always the best move. Where we haven't been involved in any, but there's been some nightmare scenarios where someone adds their kid gets divorced. Guess what? mom's losing her house now because they got to sell the property because the son was joint on it, and or different things about somebody writes it down or has it as, using as collateral. It's a position that we don't recommend our clients doing lightly. We have seen it where people have put on joint, but it seems though like the government too is trying to clamp down on some of that as well. Like they had their famous pullback on where they were the Bear Trusts, where but yeah, so it's something that we don't encourage our clients to do. We do get questions on that. It's just so much can go wrong. We prefer there's other more elegant solutions that we find if you're planning on transfer to avoid probate. Like there's, I'm not insurance licensed, but there's other advisors in our office that are insurance licensed where segregated funds has been a solution that they've used to pass on to their children when they've passed along and to avoid probate fees that way. But yeah, so it all depends on the individual again, where if the kid has drug problems, is not a good solution to add them to joint. But so there's a lot depending on that. There's not one solution for everything, but we do label that with a big warning to add their kid to any account that they have, where especially like a significant asset they have, like a home, because it leaves them wide open.
One thing I always find is also people think, oh, I'm going to sell it to my kid if they're like, let's say if you're selling a house, I'm going to sell it to them for $1. It's like the tax man is much smarter than that. They understand what you're trying to do. And if it's not your principal resident, you're going to pay taxes.
Yeah. Yeah, no, exactly. No, you have to consider tax wise too.
Now, here's one final thing before we let you go, Gavin. Especially in Asian culture, talking about estate planning with parents is a very taboo thing. I don't know if Alex, you feel that, or Gavin, you feel that with your parents too. It's almost like saying the parents are saying like, you want me to die sooner. It's like an Asian thing that you don't talk about. Like you have clients who have parents in that kind of community or that kind of thinking. What do you tell your clients? Like if they want their parents to talk to a financial advisor, but it can't come from them. Like how do I get a third party to come in to talk about estate planning without me telling them that?
I would say that my parents have always been very open. They're business owners, so it's been ingrained in what's the legacy going on. But usually people smarten up after you tell them a few horror stories and just some. I can't stress that enough. Everyone should have a will. You have a family, there's got to be a will. It's just something so easy, and you can clear up, like, can you imagine, like, somebody's spouse passes away and they can't access the bank account to pay bills and do different things, and it's just the family's going through such a tough time, and then to have it where they're dealing with the financial stress of it all at the same time, it's something so easy just to clear everything off. But usually we do have clients where they're very hesitant, but once they come around like, hey, if anything happens to you, your family's going to be screwed, they come around to realizing that, hey, I got to get on this. So it's definitely a talking point we have with every one of our clients, that the importance of having a will, making sure that their estate and their property is going to be given out how they wish.
Great. Thank you. You have any closing questions, Alex?
No, the one thing I've seen in some cases, and I don't know if you guys do it at Acumen there, Gavin, is like, I know some places, do you like, obviously when you have someone's like investments and stuff, you're giving them the plans, but do you guys do like, let's say if I came to you and I'm like, hey, I just want you to build me a plan. Tell me what I need to do. Do you guys do like a fee for service that way at all?
We don't do a fee for service. We can't do business that way, but we get paid on the managing the asset side. But we do absolutely. We have clients that there's some work involved on our side where we're not charging clients to meet with them. It's a complimentary service just to do a review with them and how we would manage their money. And so with that, so we do retirement projections because everyone has the same questions. Like I see in my RSP account and my TFSA account how much money I have, but what does that mean for me? How much money do I have in retirement? How much am I going to have? And it's how much is OAS going to be, old age security? How much am I going to get from CPP? And that we try to really help individuals out with answers to that, and do it in a way that's conservative. Because the worst is when you're looking at a report, then it's saying, oh, I'm going to be broke when I'm 90 years old. And then I don't know if you guys have done much research on the costs of care. It's like $10,000 a month, and you're not eating steak and lobster every night. That is, you're in like a bare bones living situation. And so that too is like, if you're at zero, it's
unless
going
you
to
have
be
family.
you're leaving someone in a tough situation.
I've heard.
Yeah. Here's the last one before.
I've heard. I don't know if this
Alex.
is more in the States, but I've heard some seniors, instead of going to an old folks home, it's cheaper for them to go on a year-round cruise because there's medical on the boat. Have you heard from that?
I thought you were going to say go to jail. Yeah, I've seen that. Yeah. Now, we were talking about CPP and OAS there, Gavin. Well, let's do this last one. Do you see, like, talking about business owners and stuff, do you see a lot of people that actually stop paying into CPP and OAS, that they start doing their own? Like, I don't pay into that stuff anymore. I do my own investing that way just because I don't believe in the returns. Yeah, as a business owner, you're very lucky that you get to do that, where, as an employee, you don't get that choice.
Well, Gavin, thanks so much for joining us. We're at the end of the show. Again, Gavin Webb is a portfolio manager, certified financial planner, retirement, estate, and tax planning expert. Man, that's a mouthful. From Acumen Capital Partners. So you can find him. Go see Gavin for all your financial planning needs. Gavin, thanks for joining us. On behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in. We'll see you next time.
Talk to you later.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.